Buddy, it's Brian Shannon from AlphaTrends.net. Today's Sunday, the 4th of August, 2019. Let's take a look at these markets. We're off to a rough start for the month of August here. And of course, this week was particularly difficult for the equities. Semis were down 6%. They have been the leaders, but still up close to 30% year to date. So let's take a look at the charts. And, there's a typical scenario we go through. And I've seen this over and over again. One, we start to see a little bit of stocks getting stopped out from a swing trade perspective, and then we start to see the markets get below their 5-day moving average. That turns me cautious. I don't expect drops like the one that we saw here this past week when we're below a declining 5-day moving average. But again, I don't expect anything. I listen to the message of the market and let it try to tell me what to do and what my actions should be. And as I always say, when we're below a declining 5-day moving average, we're considered guilty till proven innocent over the intermediate term. It might turn into a bigger, top, but I'm not here to predict those things. I'm here to listen to the message of the market and look for clues as to what's likely to be next. Now, I have a number of things drawn on this chart. I hope it doesn't look too sloppy. I've got the volume weighted average price from the December low. That's that green one. From the January 1st, beginning of the year, that is. That's the blue line. Then I drew a trend line off of these lows. And you see we're coming close to that trend line. The other thing is, this past week, I had pointed out the volume weighted average price from the May low. That's important because it was a significant pullback, and it also hit the volume weighted average price from the low of December. So I was thinking that had the potential to become support, but obviously we ripped right through that. Instead, we're on that thin green line, which is the 50-day moving average. I had pointed that out on a tweet on Thursday, and then we've got the volume weighted average price from the April high. So what do we do with all this information? Does it mean we buy at these levels and add in? Not for me in particular. What I want to do is look at the high levels of probability where the market has the potential to make a turn. So identify those on the bigger time frame, and once I've identified those levels, then I switch down to a shorter term time frame and say, is there any actual evidence of a structural change on the intermediate term time frame? I'm not talking about day trades, I'm talking about the intermediate term time frame. Here we're looking at the 15-minute chart. Each candle represents 15 minutes of the S&P 500. Now, we got pretty deeply oversold, and it's likely if we get a bounce early this week, this prior band of support is likely to become an area of resistance. It doesn't mean I would sell short there either. I would look for evidence that it's beginning to roll back over again and failing with a declining 5-day moving average. So it might look something like this. And if I was to, draw out a potential scenario, I'm not, making a prediction, but a potential scenario, maybe we do something like this: flush out this low from Friday, which would then put us on that volume weighted average price and that trend line, if we were to come down towards that trend line, and then perhaps we would see that the second shoe drops, and then we start to see something like this, and then it rallies back up into this 5-day moving average, and it can either fail in there and begin to make a top, or it could be just another one of these multiple, numerous dozens, hundreds of false tops that we've made in the market. My thought is the longer term trend is still higher, so I'm looking for the potential that we find some support. But right now the evidence isn't there, so it's not time to act. Same is true for the Nasdaq. The Nasdaq, we broke below the prior peak. We're right on the 50-day moving average. That's that blue line that gets the green line right here that gets lost in there. But this is also the volume weighted average price off of the June low. And just below that, if we're to see the second shoe drop, the volume weighted average price off of this peak. And then, of course, we can draw a trend line off of these lows as well. And right now, the Nasdaq is a little bit healthier, but it doesn't mean it's healthy. We're still below a declining 5-day moving average. So intermediate term, let these markets settle down. Let them tell us what they want to do before you just throw money at the market hoping that this is a buy the dip event. We don't know till after the fact. Russell 2000 this week tried to break higher, and it looked like maybe it had an opportunity to start to show some leadership. This has been an underperforming market, and it continues to be weak. Here we can see, let's go back to that sheet. Well, I can't find it, so it's not so significant. But the point is here, it looked like it was ready to break higher. And from failed moves, we often see fast moves in the opposite direction because the bullish sentiment builds up. Once people realize it's failing, shorts pile in, the longs start to spit their stocks out. I think that the Russell 2000 has just been a very difficult market this year. We're right on that trend line. We're right above the 200-day moving average. To me, the Russell 2000 is just a complete avoid. The semiconductors pulled back deeper this week. Maybe they settled down in towards about that 109, 110 level. That's important for a few reasons. The biotechs continue to be garbage. They ran up right up into where they were supposed to find supply. The potential for resistance was there. And now we can look at it and say it was resistance. We saw the 200-day moving average, the volume weighted average price off this low, the declining 50-day moving average all in that area, and the biotechs continue to be garbage. They tried to rally this week, but then failed miserably. But they failed where they were supposed to fail. That's the key. You can't get excited about 1 or 2 days of strength without looking at the bigger structural picture and saying, how is this framed in the bigger view of things? And it just does not look bullish at all. Look how we're riding this trend line right here in the biotechs right now. We have lower highs coming into it. We have declining 20, 50, 100, 200-day moving averages. To me, this represents the group most likely to fail miserably first if they're going to fail miserably. Financials came right down to their important level, the 50-day moving average, also the volume weighted average price off of this peak, and we can draw that trend line off of these lows as well. Oop, what happened there? Anyways, the message of the market overall is give it a chance to tell us what it wants to do. Let it settle down a little bit. Don't be the first to buy this weakness. Every single day I do this analysis for subscribers. It's $299 a year. Maybe you're interested in that. If not, maybe you're interested in the other service where I provide swing trade ideas each and every day for subscribers. If not, enjoy these free weekend videos, and I'll talk to you again soon. Thanks.